As Canadian investors, we were 4 to 5 years behind on commission-free trading. We still don't yet have option commission-free trading. As well, our Canadian markets have been lagging the US markets for the past decade. So all in all, it sounds like we as Canadians get shafted when it comes to investing. But just this past Thursday, Canada got the world's first Bitcoin ETF, and we can stick this to the neighbors in the south. So in today's video, I'll be talking about the Bitcoin ETF and all the basics that you need to know. As well, I'll be comparing the Bitcoin ETF with actually holding Bitcoin itself, and comparing the Bitcoin ETF with some of the other funds like GBTC. And lastly in this video, I'll be letting you know whether I'm going to be purchasing this Bitcoin ETF. If you want to see all the trades that I make in real time, then check out the Patreon link down below. Now moving on to the Bitcoin ETF. So as I mentioned earlier, the Bitcoin ETF came onto the markets this past Thursday on February 18th. And it started out at a price of $10.59. Rapidly it shot up to $11, however it came back down during the day. And by the end on Friday, it traded at $10.55. And one thing that you need to know about the Bitcoin ETF is it doesn't track the price of Bitcoin one-to-one every single moment and every single second. However, at the end of the day, the price per share will equal the net asset value per unit. You might also be wondering whether this Bitcoin ETF is safe, because traditionally Bitcoin is seen as a risky investment. People have been hacked as well as lost their wallets and end up losing thousands or even millions of dollars. When I did some research, it looks like the Bitcoin ETF is relatively safe. They store all the Bitcoin with Gemini Trust Company, which has cold storage facilities. Basically meaning they hold their Bitcoin in a facility which is not connected to the internet, so no one can come in and steal the Bitcoin unless they're physically there. Gemini Trust Company also has insurance on their cold storage up to $200 million. That's better than some exchanges or a lot of exchanges out there who don't actually have insurance. So if you hold your Bitcoin on that exchange and the exchange gets hacked, then you lose everything. And this happened to another company called Quadrigas back in 2017. Currently, the Bitcoin ETF holds 2,501.83 Bitcoins, and that's equal to around 0.0134% of the entire Bitcoin supply that's available today. And if we're to put that in dollar amounts, that equals to around $143 million of Bitcoin held by this ETF. So we can see that this is a fairly small percentage of the entire Bitcoin supply that's held by this ETF. If you guys have been investing in ETFs, you'll know that there's management fees associated with ETFs, although they're a lot less than mutual funds. The management fee for this ETF though is a little bit higher than the traditional ETF. It's at 1% right now. And the reason why the Bitcoin ETF has a higher management fee than other ETFs is because they have to pay for things like cold storage, as well as every Bitcoin transaction comes with some sort of fee, and they lose out a bit on the spread. For this reason, every time the ETF goes out there to buy Bitcoin, they have to pay this fee. As well as the ETF also has to employ some people just for its upkeep, but not as much as a mutual fund which is actively managed. Now I'll give you a simple explanation of how the Bitcoin ETF works. Now, if you're an investor looking to buy into this Bitcoin ETF, you'll hand your money over in exchange for shares. And the team from the Bitcoin ETF will take your money and go out there and buy Bitcoin and throw it in the Gemini Trust Company's storage. So for every single unit of the ETF bought, they go out there and buy the Bitcoin. And the same thing happens for when a unit is sold. So when a unit is sold, the company will take the equivalent amount of Bitcoin, go out there on an exchange and sell that Bitcoin for cash and return that cash to you. Now there's a caveat to this where it doesn't work for every single transaction like that. I believe at the end of the day, they'll calculate the number of units sold and bought, and whether the ETF is positive or negative, they'll either go out there and buy Bitcoin or go out there and sell Bitcoin and settle the transactions like that. Now let's compare the Bitcoin ETF with GBTC. The Bitcoin ETF is an open-ended fund, meaning that it can issue shares whenever it wants and close shares whenever it wants. You can think of an open-ended fund working like this. If you go out there and want to buy a share of the Bitcoin ETF and there's no shares available to be sold, then the Bitcoin ETF can instantly create one, because you'll exchange your money for a share, and the Bitcoin ETF will exchange your cash for Bitcoin and store it in the Gemini Trust Company. However, for GBTC, they're a closed-ended fund, meaning that they can't issue shares every single day or every single moment. They have to issue shares just like any other company through some sort of bought deal offering. So the Bitcoin ETF will track the price of Bitcoin a lot more closely. However, as I mentioned before, it won't track it down to the exact second, but it'll track it to the day. GBTC, which is a closed-ended fund, is actually more based on supply and demand. And when we see there's a lot of people interested in buying Bitcoin on the stock market, we can see the premium for each GBTC share is going to be a lot higher. So in 2017, when we had the Bitcoin boom, the premium per share was around 100 to 120%, meaning that the net asset value per share was half of what the share was actually worth. So let's say the shares are trading at $60. Each share that you bought only owns about $30 of Bitcoin. So if GBTC went bankrupt, then what would happen as a shareholder? You would only receive $30 for the $60 that you paid for that share on the spot. And if you were to buy at the heights of 2017 when the premium was around 100%, and then a couple months later it crashed down by 85%, not only would you have lost 85%, you would have lost the premium difference as well. So we can see here that the advantage of owning the Bitcoin ETF is that it tracks the price of Bitcoin a lot more closely than a closed-ended fund like GBTC. However, if you're trading GBTC, you can exploit the premiums. So when you see the premium is low, you could probably buy in and sell when the premium is high. And usually when the premium is high, the price of Bitcoin is going up rapidly because people are trying to get in and there's not enough units to be sold. So when supply is short and demand is high, then the price goes up even more and the premium disparity increases. When comparing the Bitcoin ETF with actually owning Bitcoin itself, the advantage of the ETF is, first of all, you've got the security of the ETF. The fact that the Bitcoin is being held by Gemini Trust, this is probably a lot more secure than what most people do, which is hold their cryptocurrencies on an exchange. As I mentioned before, Quadrigas was one of the exchanges that went down in 2017, and everyone who left their Bitcoin on this exchange ultimately lost their entire investment. This next advantage is the one that you want to pay attention to. The Bitcoin ETF can be held in a TFSA or an RRSP. Versus Bitcoin itself, if you buy it on an exchange, you can't hold it in a TFSA or RRSP account. So essentially you could own Bitcoin tax-free. And if you do believe that Bitcoin is going from 55K or 57K, where it's at today, all the way up to 570K or even $1 million per Bitcoin, then you can own Bitcoin and invest in it tax-free. The fact that the ETF is regulated by laws, this generates trust with its investors. So if you're a more risk-averse person, you might feel more comfortable investing in an ETF rather than going out there and buying Bitcoin yourself. The ETF can be bought on a stock market exchange, just like in your Wealthsimple account or on Questrade, versus if you're going to go buy Bitcoin and you don't already have an account on an exchange, it might feel a little bit foreign to you. So again, buying the ETF might be more comfortable for you rather than owning Bitcoin itself, because it's an asset that's intangible, so meaning you can't see it. As well, this is new technology which a lot of people might not feel comfortable with. If you're a day trader and you want to day trade Bitcoin, it might be better for you to day trade Bitcoin with an ETF versus buying and selling on an exchange. If you're buying and selling on an exchange, you're going to incur these 1 to 2 or even 3% fees per transaction. However, if you're buying the ETF on Wealthsimple Trade, for example, you won't be paying any commissions at all. Also, the 1% management fee won't hurt you much because you're holding it for a very short period of time. The last advantage I want to point out is the fact that the Bitcoin ETF has insurance versus these exchanges or hard wallets don't have insurance at all. Now moving on to the disadvantages for the Bitcoin ETF. So the first disadvantage I see is the fees. The 1% fee might not seem too bad at first. However, if you're a long-term holder of Bitcoin, they're going to be deducting 1% from your Bitcoin holdings every single year. And if you guys know anything about compound interest, 1% doesn't sound like a lot, but when you compound it, it builds up over time. If you're holding Bitcoin for retirement and believing that hit $1 million a year, and you're holding it for the next 30 years, well, say goodbye to 1% every single year. The next major disadvantage is the fact that the Bitcoin ETF, you can only trade from 9:30 to 4 on weekdays. So you can't trade it like Bitcoin, which is 24/7. Let's say there's a crash in Bitcoin on Friday night, or there's some sort of like black swan event that happens where everyone decides to sell out of the Bitcoin. Well, if you own the Bitcoin ETF, you're going to have to wait till Monday morning. And by that time, the price that it opens at is going to be significantly lower. But if you own Bitcoin, the asset itself, on an exchange, you can easily on Friday night also sell out. And the reverse goes with if there's some sort of big news about Bitcoin, like, Tesla's buying Bitcoin or Elon Musk tweets Bitcoin, then maybe this is a time that you want to get into Bitcoin, but you won't be able to do that with an ETF. You can do this with Bitcoin, the asset itself, on an exchange. The last disadvantage, which is a very minor one, is the fact that there's going to be a bit of disparity between the movement of the ETF versus the movement of Bitcoin, because the ETF doesn't settle the transactions every single second. As I mentioned before, I think how it works is the fact that they calculate the net orders or sells for that day, and at the end of the day, they settle that asset. So if they received a positive influx of funds, then they're going to go out there and buy Bitcoin. But if they have more people selling off the ETF, then they're going to go out there and sell Bitcoin and return the money to the original unit holders. So now, what am I doing with this Bitcoin ETF? Well, personally, I think that this Bitcoin ETF is probably a great place to invest in Bitcoin in my TFSA. I think that Bitcoin, at least over the next 6 to 12 months, has pretty much a 99% guarantee, in my opinion, that it's going to go up from here. I honestly think that it can go from 57,000 to 100,000 by at least the fall time. And once it hits that mark, I'll probably start selling off a bit. So my plan is to buy in at least next week probably, and start averaging in over the next month. And I think that I almost want to go super heavy into it. I'm thinking of maybe putting anywhere from $10,000 up to 6 figures into this ETF. I think that this is probably the best short-term play that I can come up with right now that's almost guaranteed to make money. And this is basically because of the history of Bitcoin and how it tracks certain trends that are going on. And right now, a few things that I'm looking at are this model that I'm showing on the screen, where if it touches the dotted green line, which we've seen in the past, this is usually a signal of a crash is coming soon, and pretty much it's coming imminently. Also, Google Trends right now has not yet reported sky-high Bitcoin searches, which we saw in 2017. So I think that once the search ranking for Bitcoin surpasses the 2017 levels, which I expect it to, that's when we're in the FOMO territory, and that's when we're close to the crash of Bitcoin. But for now, I still see a lot of upside with Bitcoin, where I'm comfortable putting in pretty much all my short-term trading funds into this ETF, especially in my TFSA and possibly even my RSP. And by putting it there, all the gains from this investment are tax-free. So that's my plan for the Bitcoin ETF going forwards. Let me know what you guys are doing, whether you're buying the Bitcoin ETF or you're rather just buying Bitcoin itself. Personally, I do hold Bitcoin itself, but I also do want to buy the Bitcoin ETF in my TFSA and RSP. Don't forget to leave a like down below, subscribe, and hit the notification bell for new videos from my channel. If you want to check out more Bitcoin videos that I put out, check these out on the screen. If you're there, I'll see you there. If not, keep up the grind and have a great day.